It's the antithesis of the huge negative that happened on November 6th, 2021, the exact peak of the Bitcoin previous cycle. Why was that the exact peak? Because they didn't approve a spot ETF, which would increase demand for actual Bitcoin. They approved a futures ETF. Now, why is that important? Because that allows the banks to go naked short.
Mark Yusko, the founder, managing director, and CIO of Morgan Creek Capital Investments, recently appeared for an interview on the Lark Davis channel where he discussed, amongst other things, the importance of BlackRock's spot Bitcoin ETF application. During the discussion with Davis, Yusko notes that the Bitcoin peak was prematurely cut short in 2021 with the approval of a futures Bitcoin ETF instead of a spot ETF that provides direct access to the leading cryptocurrency. The decision by U.S. regulators to approve a futures ETF while denying a spot ETF, of course, favored their banker buddies. Yusko compares regulators' obvious preference for a futures Bitcoin ETF to the events leading up to the eventual approval of a spot gold ETF. He points out that it was only after financial giants like J.P. Morgan had their share of billion-dollar manipulations of the futures market that regulators finally approve a spot ETF based on the precious metal. Yusko believes history is about to repeat itself with Bitcoin. For over a decade, the SEC repeatedly rejected every spot Bitcoin ETF application filed by various asset managers. However, many people, including Yusko, believe that BlackRock will get a green light from the financial regulator. According to Yusko, not only will the BlackRock application be approved without issues, but it would be approved way before other applications that were filed before it. Whichever form the approval takes, Yusko says it will be very bullish for Bitcoin. Again, comparing it to gold, he explains that the precious metal's price was stuck for many years until a spot ETF was finally approved. We will now bring you clips from the discussion. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
It's the antithesis of the huge negative that happened on November 6th, 2021, the exact peak of the Bitcoin previous cycle. Why was that the exact peak? Because they didn't approve a spot ETF, which would increase demand for actual Bitcoin. They approved a futures ETF. Now, why is that important? Because that allows the banks to go naked short. In every commodity in history, oil, gold, silver, wheat, anything in history, when there's just a commodity market, like the good old days of oil. I produce oil, you need oil to power your machines. If I want to sell you oil, Lark, I actually have to have the oil to deliver to you. I have to put it on a tanker truck and send it to you. Oh, no. The CBOE came along. I'm sorry, the COB, the BOT, Board of Trade, CBOT, Chicago Board of Trade came along and said, no, we have these cool things called futures contracts. So Mark, you just promise to get some oil to sell to Lark in the future. But if we settle up before the actual date, I never have to get the physical commodity. So there's no increased demand for the commodity. There's only an increase for paper. And so what happens is the paper goes up and the physical supply stays the same. Mm-hmm. Well, that's bad for price because there's more supply, so the price falls. And so we saw this with gold. The gold ETF would not be approved. And despite all the evidence that the economy was rocking and the baby boomers were buying stuff, gold was stuck at $400. It was just stuck at $400. This unlocks a $30 trillion market. Right, $30 trillion of RIAs and brokerage firms that have been reticent to approve anything on their platform. An ETF, they're going to have to. So $30 trillion. Let's get 1/10 of 1%. Mm-hmm. 30 billion. Well, 30 billion on 600 billion, that's not much, Mark. That won't do anything. 600 billion. It ain't 600 billion. The free float is more like 100, 150, 30 on 150. That'll move the needle. And if we get 1% instead of 10 basis points, it's 300 billion. Mm-hmm. 300 billion on 150. That's a big ass number. Look, supply and demand is really simple. Microeconomics 101, really simple. When demand goes up and supply is fixed, and I will argue supply is actually inversely proportional to price, because people get more convinced that they want to hodl forever as the price rises, and they don't panic. So if the price goes back to 50 or 60, I think there'll be less free float, not more. I don't think there's a lot of people out there that are going to be selling. I think what you see with the daily selling is just the same people buying and selling over and over. It's the bots and the high frequency traders and Ken Griffin.
During the conversation with Davis, Yusko reacts to ARK Invest founder Cathie Wood's $1.5 million Bitcoin price prediction. He explains that her prediction might be slightly exaggerated, but it doesn't take away from Bitcoin's status as a leading digital asset and the perfect replacement for gold. According to Yusko, these same attributes are the reasons why politicians, regulators, and other policymakers are so firmly set against the leading crypto asset and the entire cryptocurrency industry. Let's get back to the interview.
Bitcoin's different. Bitcoin is better technology for money. And the base layer of money is a very, very valuable asset, right? The value of gold today is about closing in on 6 trillion. So that's a 10x from here for Bitcoin. But then Murray says, well, yeah, but that's just the base layer of money. All the other crap we have, the currency, is bad. It needs to be replaced with good. And the reverse Gresham's law, good money will crowd out bad. Total global money supply is 86 trillion. That's a big, big number. Now, look, I agree with him in theory, but in practice, the governments are going to fight really, really hard to maintain control of their honeypot. And they really, like, our government officials, all 538 of them, love the fact that they can own parts of companies that they vote to give money to Ukraine that ends up at companies that they own, that manufacture stuff to go shoot off in this war. That's an awesome gig. They ain't giving that up. Governments aren't going to give that up. They're not going to give up their fiat. So I'm more like gold, dodo bird, Bitcoin replaces that base layer of money, but it's in every central bank. It's at the base layer of all fiat on top of it. That's a good asset. And that asset is more and more valuable because we don't price it in Bitcoin. We price it in fiat. And as that fiat continues to, look, when I was growing up, I ask people this all the time, and you're too young, but I ask people, what was the lowest price you remember for a gallon of gas? Mine is 33 cents. I remember it like it was yesterday. At Totem Lake in Kirkland, Washington, 33 cents, got my, learning to drive. And I put gas in my car the other day and it was, $4. It's the same gallon of gas. It didn't get better. It doesn't do anything. In fact, it's less good because there's ethanol in it now. So it's not quite as good, but let's take that off the table. It's the same gallon of gas. It's not that the gas got better. It's the money got worse. And so candy bar, right? A Twix was $0.25. Now it's like $2, or a Coke, $4.50. So that's not things getting better. That's the money getting worse. And so Bitcoin from 2020, right? Bitcoin's like $10,000. And they doubled the money supply in the United States. This is crazy. This is crazy. 247 years as a republic, right? We're a republic, not a democracy. We're a republic. So 247 years, and a democratic republic, but we're a republic. And 244 of those years, we created half the money. And then in 2 years, we created the second half. So what should have Bitcoin done? It should have doubled. Kind of did that. And now it's gone up a little more because the Fed bailed out SVB and all these other things and increased the money supply again. It was like, oh, they're tightening. They tightened interest rates, but look what they did with their balance sheet. It's going back up again. And so it's not a surprise that Bitcoin's up almost 100% this year because the money supply is increasing. And that's all the price of Bitcoin is. It's a reflection of the quality of the currency in which you denominate it. So if you denominate it in yen or euro or dollars or bolivars, they go down, it goes up. Great.
On the issue of spot Bitcoin ETFs, Grayscale Investments, the firm behind the Grayscale Bitcoin Trust, GBTC, has urged the SEC to be fair in its rulings. On Thursday, Grayscale issued a statement calling for equal treatment of all applicants, proposing that if the SEC approves any spot Bitcoin ETF applications, it should do so for all simultaneously. According to the investments management company, the SEC could create an unfair first-mover advantage if they only approve the listed applications, including those from BlackRock, ARK Invest, Valkyrie, and Vanik. Like Yusko, Grayscale is concerned that the SEC will play favorites with BlackRock and other Wall Street giants. Do you think this will be the case? Please drop your replies as well as your comments on Yusko's interview in the comments section below. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.